Hey, welcome back to Two Super Guys Try Stocks. I'm Dylan.
And I'm Vinny. And holy crap, we finally actually had a decent week for Alibaba shareholders. Okay. We had a couple of news stories come out, and an interesting calculation that I'm going to show you at the end about some Alibaba share purchases. All right. So, if you want to look at the 5-day performance, up 1.8%. That's really respectable for a Chinese equity. Okay. We're not talking about NVIDIA here. We're
No.
talking about a Chinese equity. So 1.8% green for a week is pretty phenomenal. They did have this nice pop on Friday and then it kind of, treaded off a little bit during the day. We're going to talk about the news behind that nice pop. Um, don't forget, though, we're actually positive for the year to date, dude.
It's been 3 years.
Underperformed the SPY by like half, but yeah, we're
Yes.
positive year to date. It's crazy.
Wait till you see how much it's underperformed over a 3-year period.
Oh yeah. All right. So this is the news headline from the kind of pop we saw on Friday. But basically, it was Alibaba shares rise after it completes 3-year regulatory overhaul. 3 years,
Finally.
man. 3 years. It has been a long haul, to say the least. All right. So Alibaba has completed a 3-year regulatory rectification process. All right, following an antitrust fine it received from charges of monopolistic practices back in 2021. China's market regulator said on Friday. All right, shares popped 3%. We already kind of talked about that. On Friday, China's State Administration for Market Regulation said that over the past few years has been supervising Alibaba's process to become compliant with antitrust regulations. The rectification work has achieved good results, the SAMR said, according to Google translated statement. This is all from a CNBC article, the one that I just gave you the headline from before.
Fair.
All right. So you remember this 18 billion yuan fine, 2.6 billion US dollars. That's kind of how it kicked off this war against Chinese tech and e-commerce companies. And it's been 3 years now since that started.
Jeez.
Yeah, it's left my portfolio a little bloody. Okay, I'll say that.
I agree.
Um, right. So the the regulator's focus was on a practice that forces merchants to choose one of two e-commerce platforms. All right, remember this, where they were like, you can't be listed as a merchant on our platform and someone else's.
Yeah,
They were forcing them to choose, and of course, they chose the biggest, most successful one.
which I agree.
Very
Not cool.
monopolistic.
Yeah,
Yeah.
that's fair.
So they stopped that process, but they were also under this like 3-year regulatory, kind of framework where they were being watched heavily by the market regulator to make sure they didn't do anything else questionable. And we saw, well, like I said, not only what happened to the stock, but the business fundamentals over that time period definitely degraded from where they were in 2021. But you also have the macroeconomic Chinese kind of downturn during this time period as well. So it's hard to parse out how much of this is Alibaba versus how much is regulators versus how much of it is China in general. And we had a global pandemic that was going on too. So
Well, there's
yeah,
also like change in leadership too. There's a lot of different things happened, and the Chinese
yeah,
government definitely put in some like people just to be like,
yeah,
watch this.
yeah.
Which, I think we all disagree with, but yeah, I can't control that. So
Fair enough. Yeah. So SMR said it will now guide Alibaba to continue to improve its compliance and efficiency and to accelerate innovation. Accelerate innovation. I thought that was an interesting little sprinkle there in the end. You know, there's definitely been a lot of talk about China's economic downturn and how the CCP is kind of softening their stance and trying to encourage growth amongst their large e-commerce and tech companies. And I think this is like a little sprinkle of that, if you will. Point towards good things ahead from regulatory environment.
I would agree.
All right. The conclusion of regulatory overhaul will help Alibaba's worst run-ins with Beijing behind it. Jeffries analyst said in a note Friday that the conclusion of the regulatory process was a positive for the company, which highlights this is a new start and ensures compliance and operations. Um, but the regulator's ongoing announcement could also signal that the ongoing softening stance from Chinese regulators toward private technology firms, this is kind of what I was just talking about,
Right.
intense crackdown that began in 2022. This time, Beijing enacted several regulations and moves that aim to restrict the power of domestic technology firms in areas ranging from antitrust to gaming. All right, this is just recapping what we basically just said. They are now in a different, possibly, releasing or easing off regulations and being a more stimulatory environment now that they've seen their whole economy have a downturn.
I will say, I know that people, their biggest problem with this company is communism. With that's fair, by the way, because it's completely unpredictable. The This is going to be an extremely compliant and efficient company. That's like a super communistic statement from a government. I mean, that's right out of
Yeah.
1984. But yeah, just throw that out there.
Yeah. They're not taking the reins off entirely, but they are
No.
easing off. Um, so this is the final note from that CNBC article, but the Titan showed early signs of recovery in the June quarter as cloud computing revenue accelerated and transactions via its key e-commerce platform looked healthy. This is what we were saying. The business fundamentals definitely look like they were improving in the most recent quarterly results. And now we're going to get to see a little bit of what sort of management has done as far as allocating capital. Right? So this is shares outstanding. They've been really steadily decreasing the shares outstanding over the last 2 years, but they've accelerated significantly over the last 2 quarters.
2 quarters.
Remember this from their most recent earnings statement here, where we see the U.S. dollars per quarter spent in share buybacks, 5.8 billion most recent quarter, 4.8. Previously to the new management, they're doing 2.9, 1.7, 3.1. So they really have stepped up their share buyback purchase pace. Additionally, the thing I want to note from here is look at this number at 2.378 billion ADSs as of June 30th, and 445 million ordinary shares that were bought back during that quarter. Now, because Alibaba had its general meeting, the voting meeting, I didn't vote. I completely ignored those emails from Charles Schwab. I get too many of them. But the results were tallied as of August 22nd, right? And when they filed this regulatory filing, we got a little insight into what their share outstanding count was as of this date. So that's just a few days ago. If we go back and look through the numbers here, basically we're looking at a net reduction of about 35 million ADSs during that time period from June 30th to August 28th, or about 280 million ordinary shares for a net buyback so far this quarter of 2.8 billion US dollars.
So that's from June 30th to August 22nd. I know I'm
August
frozen, but that's
22nd,
fine.
exactly.
So
Yeah,
that would
yeah.
mean
So,
that's half. That's half of the
yeah,
quarter. Okay,
yeah,
so all right, that's not bad. So if that
yeah.
continues, then we might. I mean, that's a pretty solid number again.
Yep. And I use approximately $80 per share as my number to calculate this. These are all kind of rough estimates, but that's what we're looking at so far in terms of share buybacks over the most recent
I mean,
few weeks.
that's huge. That means that they're keeping up the pressure because
Mhm.
2.8 during the first half. If they match that, that's another 5.6. That's a lot. That's
Yeah,
crazy.
another 5 billion share buyback quarter is what we're looking at, which is awesome.
So this is the BABA chart. Now the dashed gray line here, that is the 100 moving average, but granted this is the weekly chart. So this is not the daily chart. We have only gone past it briefly since this 3-year downturn. I zoomed in
Wow.
because we weren't even close to it the entire time. So,
Yeah.
but we went past it just in May. We are now at it again. So we're going to see what happens here. It looks like we are breaking into a bullish move. It's impossible to know Chinese companies charting is almost just shy of pointless. Can you go to the next one?
Yeah.
Um, Now the question is, Vinny, do you buy more? Because
Oh,
I get it. I'm actually pretty heavy in this. If this can hit back down to this is the daily chart, the 100 moving average, 78 ish, I would like to buy more if it's possible.
yeah.
If I can, yeah,
Uh,
just a little bit more, not a lot more, but I mean, Burry's going all in on it. We've endured 3 years of bad news. I don't know what your cost average is. Mine's like 101 or something.
yeah. Probably not far off from there. I'd have to look at it. I haven't been selling covered calls against it in the last several months. I've stopped doing that just because it looked like we were starting to finally pivot towards
Yeah.
a bullish trend for me. Is my thought.
Yeah, no, I would agree. So let us know what you think, guys. The share buyback thing is insane. And no
Mhm.
more overbearing. Well, they're still there. They're definitely still in the company. But the regulation process is over, so that's fantastic.
Yeah.
All right.
All right, guys. Catch you in the next one.
Later.